You're confused about what is happening on gold again, right? Let's talk about it. So last week I made a video explaining parabolic markets and how you could possibly trade there. But I did that using a whiteboard and I didn't give real life chart examples. So let's do something like that on gold. Gold has been in a huge uptrend. And most recently, this is what happened. Price created this daily fair value gap, which it traded into on Friday and rejected beautifully. Now, if you did not take a position at that time and hold through the weekend, you would certainly have missed out on this move. The problem, however, is that most traders are waiting for something like this to happen. You see this order block here? They're waiting for price to come all the way back down here. But price is respecting this fair value gap that is, for all intents and purposes, in the premium of the range and has now rejected off of it. On the lower time frames, this is what this trade idea would have looked like. Strong impulse. You see how there was a shallow consolidation? We were fortunate this time around that price beautifully swept these lows, tapped nicely into the daily fair value gap, went just past the midpoint, and then rejected. If you had taken a trade on the 1 hour time frame, you would have had to hold your position over the weekend. And then when the market opened this morning, boom, straight to take profits. This is a 2 hour trade that has already materialized. If you did not get this trade, another one is setting up. You see, price has now tapped into a daily fair value gap and has shot up. It has created this huge imbalance in the process. But look at something interesting that is happening. You see this small consolidation that is forming? Most SMC and ICT traders will be marking out this order block, which is this huge down close candle that's dug into the daily gap and will draw out the opening price. So where the cursor is right now, they will be expecting price to trade all the way back down into there before looking for a continuation to the upside. But Trump has been threatening tariffs against the EU. The EU is threatening retaliatory tariffs. The Greenland conversation is still ongoing. So what you're more likely to see in this scenario, if you're fortunate, you might get a very shallow sweep of this is Asia low denoted by these two orange horizontal lines. You might get a very shallow sweep of Asia low and then price takes off. But the easiest and the best way to confirm it is just wait. If price starts trading lower, no problem. You're waiting for it to get to your level. But most importantly, if you see a 1 hour candle break above and close beyond this consolidation high, then you can be a buyer there. You go long, so your long position is going to look something like this. You would be going long somewhere here. Your stop loss will be all the way below this consolidation so that if price comes back to it, you know that, okay, the market wants to retrace and is not looking to continue the breakout. And then you can target your 2 hour or your 3 hour or however far you think price is going to go and then see if this huge momentous move is going to continue. I'm Velos the Trader, and I'll talk to you later.